Intraday trading, one of the most desirable forms of trading out there, because what happens here, you start the day in your account with your account, and then throughout the course of the day you generate some profits, hopefully, and then by the end of the day your trading is closed. No matter if you have a profit or loss, you do not carry on the trades for the next day. You're not a long-term investor where there is a huge months or years worth of investing in the market. No, these are trades where in a very short period of time your trades, your profits are realized and back in your account. And that is why people like it so much. Even though there is some risk attached to it, people like the idea of gaining a lot of profits in a short amount of time. And yes, we are going to learn some intraday trading strategies today. So these are some bread and butter strategies which you can use in almost any stock or index across any category in the intraday space. So let's get right into the video where I discuss few of my favorite intraday strategies. This is Ajay. Welcome to Market Feed. So I hope all of you have come watching all the videos of the stock market A to Z series by Sharique here in this channel. So we have talked about everything you need to know about trading and investing, as I've said earlier, the basics of the stock market to fundamental analysis to even technical analysis in the market. And you can consider this as another episode or a continuation of that series where we discuss few intraday trading strategies. So first, let's discuss trend following strategies. So these are strategies where there is some trend created in the market and we are trying to ride the trend along with the market. So no further complications here. Let's get into two intraday trend following strategies for you. So it is one of my favorite strategies out there. It is called as a bullish flag pattern trading strategy. It is one of the most effective as well. So a bullish flag, as the name suggests, is a stock which is going in a very uptrending direction and then gives a retracement at the top. Right? A strong uptrend and a retracement which comes down. So when we're looking at the stock, what does it mean? It had a lot of momentum, and what are we trying to do here? We are trying to follow the momentum, right? The stock is riding on a lot of momentum, but then it goes slow. But after this, the breakout which comes will be so strong that you will be surprised by it. So to learn more about this bullish flag pattern, let's go into the chart here. This is IRCTC's 5-minute candlestick chart today. So as you can see here, a strong bullish momentum followed by a bearish consolidation phase. Strong bullish momentum, consolidation phase. Bullish momentum, consolidation phase. I hope you see the pattern here. Let's make this into a more presentable chart so that we can get right into the studies. So yes, as you can see here in the chart, all these zones are showing a similar pattern or a shape as that of a flag, right? And because it's in a bullish position, we call it a bullish flag pattern. That is it, right? And what are the rules here? The rules are very simple. The stock is moving up with a lot of momentum and then it moves down into a consolidation phase. Then it gives a breakout back up again. Again, a strong bullish momentum, consolidation, back down, coming back down, and a strong, even stronger breakout, right? So where do we have to buy? Where do we have to sell? That is a question. So every time the SL, your trades SL is what I would like to first decide, right? And the SL should be just below this low of the consolidation zone, right? I don't care if the stock kept going down like any of this. It doesn't matter as long as it's moving down in a channel formation, right? So stock went up, moved down, keep an SL just below this consolidation phase or where it started to bottom out. So yes, when this trade gives this breakout above this consolidation phase, you have to take a trade. Let's say this is where you're taking a trade, right? When this consolidation is breaking on the upper side, let's say you take a trade here and this is your SL, which is nearly a 4-point stop loss, and from here you can set a target, easy target of nearly 1%. Even a 1% target is possible on a trending day in such a stock, right? So it's all well and good. When this bullish flag pattern plays out, the odds are usually stacked in your favor. It's one of my favorite trading strategies out there, right? So make sure you try it out. And one easy method, you don't have to go about seeing every single chart which is forming this bull flag pattern. All you have to do is you can go to Google or you can come to screener.in and you can just search this daily bull flag flag screener, right? And you'll be getting the all the stocks which are showing this pattern right now in the market. So that's a very easy way to get into the stock. Do not forget that the SL should be somewhere just below that consolidation phase. So let's say the low of that consolidation was nearly 850 rupees or 800 rupees in the case of IRCTC. Try to keep it 50 paise or even 60 paise just below it, right? Just so that your stop loss is not triggered due to unforeseen circumstances or even SL hunting, right? So keep it a bit far away from round numbers. That is what I have to say. And always try to make sure that you have a risk to reward of at least 1:1. That means if you have a SL, a stop loss of 1%, try to keep a reward or a target of at least 1% as well. All the more reason if you have a target of 1.2 to 1.5%, right? Usually what I do is I set a stop loss of around 0.5 to 0.6% and I set a target of 1% for my trades in this bullish flag pattern here. And this works beautifully across any index or stock that you try. The more momentum it has in that day, the better this trading setup will be. So please make sure you get into this and use the screener as well. Let me know your thoughts in the comments down below. Again, the next strategy is a very easy, simple moving average crossover strategy. And because this also works in the model of price action, you can use the similar techniques to find out if it's a good trade or not. So let's get right into the strategy. Moving average crossover strategy is nothing but where you have a shorter moving average running, a line running in your chart, and then longer moving average running, and whenever the shorter one is crossing the longer one on the upper side, it gives a bullish trade. And whenever the shorter moving average is crossing the longer moving average from the top down below, then it's a bearish trade indication. So again, very simple example. We'll get into the chart and show you here. So the shorter EMA here that which you should be using in an intraday trading setup is a 5 EMA, right? A 5 EMA. We have selected National Aluminium as a stock here, and then the longer exponential moving average or the EMA that you have to see or set is a 20 EMA here. So whenever the shorter EMA, which is going to be the steeper one, right? Because exponential moving average, it gives more weightage to the recent moves, and when it's 5 EMA, the moves will be much more sharper and steeper, right? So when we are looking at the EMA, the steeper one or the bigger volatile one is a 5 EMA, and when that crosses this 20 EMA from the downside, it's giving a bullish indication. So as you can see here, if you can combine it with few other strategies that we are going to learn later, like the opening range breakout strategy, you'll be able to get a very good trade here, right? So let's consider that this candle is going to be your breakout candle. So it's a good resistance zone as well. It had given support multiple times earlier, as you can see here, and when the stock is giving a breakout, right, you can plan a good trade from this zone. So let's see again, let's set the stop loss and target as well. So the stop loss should be set, as I said earlier, it should be set somewhere around 0.5 to 1%, right? So here let's go ahead, set the stop loss. Yeah, so here again 0.5 to 0.6% is where the low of the previous candle is. So I think that's a decent stop loss in this trade right here. And when you're going up a 1% to 1.2%, target would be really ideal in the stock. And as you can see here, the stock even went on to rally much more than that as well today. So throughout all these strategies, you get some good scalping opportunities as well. That means you can get in and out of stocks in a really quick and fast manner. So make sure that you set your targets and stop loss accordingly. And the time between these trades might vary. So do keep your mind open for that. And make sure that you always use something like volume or any of your favorite technical indicators to take a confirmation for all of these trades. So what I usually do is I just look at the price action. Then I look at the support, nearby support and resistance levels as well. Then I decide whether to take the trade or not. So the next few strategies are range breakout strategies. So again, the concept is really simple. Let's say the stock is trading within a set range, right? So the market is moving within a set range, and when the range is giving a breakout, there is a high chance for that breakout to continue. And why does this happen? I'll give you this simple concept to think about it. When the market is moving between a range, there are people who are trying to catch the bottom and the top of that range right? So when people are trying to catch the bottom and top, let's say at the bottom you're trying to catch the bottom of a trade or of a parallel channel right here. So when you do that, you set an SL just below that range, so that if the market in fact falls below that range against your trade, you can hit your SL and then you can get out. So you're hoping that market will continue trading between this range and all is well in your life. But when the market actually gives that fall just below the low, there are a lot of stop loss orders waiting for that movement right there, and all of them get triggered at the same time, and the market gives, or the stock gives, a good downward momentum. This is what happens in range breakout trading. So I'll introduce few range breakout strategies here as well. So the first concept, again, let's go through the concept once again. You define a range, and beyond this range, when there is a breakout or a breakdown, you take a trade. If it's on the upper side, you take a bullish trade. If it's on the lower side, you take a bearish trade. So first, let's look into a previous range breakout trading strategy. This basically means that you draw the high and low of the previous daily candle in whatever stock that you're tracking. So once you do that, you'll understand, hey, this is an important resistance zone for the stock and this is an important support zone for the stock. And as easy as whenever this stock is crossing one of these lines intraday, you take a position which goes along with the trend. So if it's breaking on the upper side, you go with a bullish trade. If it's breaking on the lower side, you go with a bearish trade. So yes, once again, let's go into the chart to see an example. So let's take the case of Hindalco Industries. This is a favorite aluminum stock, as you might know. And here we have what you have to do when starting of the day, or when picking the stock, is you have to draw the high and low of the previous day. We are going after a previous range breakout after all. So once you do that, you get to understand how the stock is playing out between the support and resistance levels, right? And when this resistance level on the upper side is broken, as it was broken today, right? This is Monday's chart right here. Around 9:40 AM it was broken. You can surely take a good strong bet in the bullish side on the stock. So again, when you're entering the stock intraday, try to keep an SL at least below the previous candle's low, right? So if this was a breakout candle, if this is where you're entering, try to set at least an SL just below the previous candle. So that will come out to near 0.4%, and you can set a target of 1.5:1, which means 0.6% as your target, or 2:1 as you can see here, which is nearly 0.8%. And because of the earlier reason which I said, there are a lot of stop loss orders waiting around this range breakout zone. The probability of profits for strategies like this are good if you select the correct time frame. And the volumes building here are just confirmation. Going through ahead with all the trading candles, the volumes have been building, and if we ignore the first few candles, it's a really good trading setup. So again, I would give one suggestion here. Try to avoid the first 15 minutes whenever you're doing this range breakout trading strategies, so that it helps you not get trapped in initial 9:15 AM volatility, and do not try to go for the last 30 minutes of the day as well. So the next strategy which I want to discuss is called as the opening range breakout strategy. So what you have to do here is that you have to define the opening range for a stock. So you have to look at the first 15 to 30 minutes of a stock's movement, and you have to select the high and low of that stock. And from there, whenever the high is broken, you have to take a bullish trade. Whenever the low is broken, you have to take a bearish trade. So let's look at the example of Reliance Industries right here. So first you have to mark the first high and the low of the first 15 minutes in the stock. So again, this is where the day starts in Reliance here, and when we're looking at the high and the low, this is where the regions are marked. And whenever you're going to take a position, make sure again you follow the risk management principles that we have learned always, and you look at the stop loss and the target for that trade. So we're getting a good stop loss for the stock, which is nearly 0.5%, and when you're looking at a healthy target of nearly 0.8%, also the stock could give you good returns, right? And this was also a good trading setup in the stock. Again, I'm giving all these examples. These are tried and tested strategies. So I'm giving all these examples so that you can go back into the charts, you can do some back testing of your own, and you can select which stocks and indices you would like to try this upon. And as always, do not risk much high capital of yours. Do it always with a very small amount, and make sure that you use a position sizing calculator. Very, very important. Nobody will teach you any of this, right? Make sure you use a position sizing calculator, which I've linked here in the description as well as in the pinned comment. I'll also add it here in the the I button as well. Go watch the video and make sure you use that. And the last strategy which I want to discuss is a mix of the previous range breakout strategy as well as another concept in the market. So whenever the stock is consolidating within a narrow range, there is always a possibility that whenever there comes a breakout, the breakout will be strong, right? The stock will be very much in a consolidating phase. It will be accumulating, distributing, any of it. Whenever there's a breakout or a breakdown, the much more consolidation that it had, the more power it would have for the breakout or breakdown, right? This is a concept which you have to understand. Now there's a concept which is known as a narrow range trading strategy, which I also want to discuss here. Now the benefit of this strategy is that you'll get to know the previous day or the day morning of the day itself which stocks which you're supposed to give your eye upon based on the PRB strategy. So all you have to do is you have to come to Google, you have to come and search for NR7 screener, and you'll be getting all the names of the stocks which are going to be in NR7 stock for the next day, right? For the next day. And once you do this, we'll be getting a set of stocks, and only out of these stocks you have to go and watch out for the logic which we said earlier, a previous range breakout. So narrow range trading strategy, again if you're selecting a NR7 strategy, it basically means that for the last 7 days the stock has been in a really good consolidation phase. If you want to learn more about it, I'll give here the description what is exactly narrow range NR7, right? And every day the stock is consolidating more and more. It's not giving a breakout at all, and it's getting tougher, more and more consolidation. When it breaks, it will break really good. That is how this NR7 trading strategy works, right? And again, you have to go mark the previous day's high and the low, and whenever the previous day's high is broken, you can take a bullish trade there. Previous day's low is broken, you can take a bearish trade there, just like the PRB strategy which we have done. So here, all the difference here is that you already know at the beginning of the day which PRB stocks to focus on, right? And these are some easy and simple intraday trading strategies, some of the most simple but the most effective and my favorite out there. So make sure you try out every single one of them, and make sure you use a position sizing calculator and you do not risk much of your capital. Please do not get your capital wiped out. Please go and check out this video. So yes, this is Ajay signing off. See you again on the next video. Bye bye.